Get Rich Slow with John Wolf. Hey, today I'm doing the Friday morning mortgage minute. So I just want to give you a big update on what's going on in the market in general. But first, I'm a loan officer in Oregon and Washington. So if you need help getting your home loan need taken care of, please reach out to me. It helps me out a bunch. Anyways, let's get right to it. So, hey, I just want to show you sort of the live ticker of what's going on in the mortgage-backed security market. Now, this is really where the base of the interest rates comes from. Now, if the market was actually really like right here, interest rates would be truthfully lower than they are actually to the public right now, but there's new risk associated with doing business. However, that's being mitigated really fast. So right now I want to teach you a little bit about risk mitigation in the mortgage industry and what they're doing about it. So first, big news though, my company has overturned almost all of the restrictions we had to lending before this whole public health issue started. So if you got blocked from doing a home loan of most types whatsoever, you're probably able to do it now, at least with my company. I know we're opening up a little bit faster than the others, but everybody else will catch up soon, I have no doubt. Anyways, other big news, the minimum interest rates available for loans is changing. In fact, my company announced internally about a week ago that they're redoing a bunch of software because they feel that they need to be able to process loans with interest rates in the low to mid 2%, which is crazy news. I mean, that really tells you what direction they think the market is going. And there's a couple reasons for that and a couple assumptions that the loan companies are working on right now that hopefully bear fruit because it's sort of good news in the long term. And I'll just kind of let you in on that secret because a lot of people don't understand what's going on. So there's three places that a loan company can make money when they're doing home loans. So one of them is origination. That is, the fees they charge to do the loan / the difference in the interest rate they charge the borrower and what they can actually sell that note to the investor. The other one is servicing, and servicing is the people who take take care of your paperwork every year. They actually get paid a percentage back from the investor, and companies actually pay to be the servicer of mortgage notes because they make roughly 0.3% a year. So if they can keep a loan for a long time, they make a bunch of money. If somebody refinances quickly, they lose a bunch of money because those notes are typically sold for about 1%, but they're actually selling higher now. And then the third place you can make money is, most mortgage-backed securities right now are based on a 2.5% bond. So you can make 2.5% interest on a very secure investment because almost all the risk is actually placed on the originator and the servicer. There's basically no risk on the investor who's buying that bond. So if you're kind of considering hey, should I buy treasury bills, which are paying basically nothing? Or should I buy this still super secure and also backed by the federal government in many ways, mortgage-backed securities at 2.5%? What's the better choice? Well, I mean, that's an easy decision for me to make. You might differ. That's okay. We can be friends. But here's the interesting thing. So what the mortgage industry is basically predicting right now is that the Federal Reserve is going to hold down rates so they can write loans at very low interest rates, like lower than have ever happened. And then they can also sell those loans to servicers for a lot more than normal, which helps lower the whole risk for the originator. And what they're really betting on is the fact or the assumption that, right now things aren't great in the economy and the Federal Reserve is actually holding the rates down artificially. So they want to make a bunch of money by getting people refinanced into better loans with lower payments, maybe even get them a little bit of cash out, and then write a loan with an interest rate so low that 3 years from now, that person is never going to want to refinance so that they can hold that loan for 10, 20, 30 years and actually make a large profit over time on the interest and servicing. And this is sort of a way that the government can do economic stimulus without actually spending any tax dollars, which is really brilliant in my opinion. Now, one piece of that assumption is that the economy is going to improve a ton last quarter of this year or next year. Why is that the assumption? Well, okay, so if interest rates are really low right now and they refinance mortgages, then they can make a tiny bit of money on that refinances now, but they're not going to make much of anything over the long term when someone else refinances again in 3 years or buys another house in 3 years at the same or lower rate. Now, if the economy is booming over the next 2, 3, 4, 5 years, then while you might be able to pick up a 2.5% interest loan now to 3 or maybe even lower, who knows, in the next few months, in 5 years, you're going to be looking at 6%. So nobody's going to want to refinance, right? So they're hoping that they can actually make mortgage notes now that'll last decade. And there is a ton of money to be made if that assumption is correct. And there's actually a ton of money to be lost if that's wrong. And what will it look like if it's wrong? Like, well, if that assumption is wrong, what you'll see is in a year from now-ish, the interest rates aren't up at all. And then the people who paid more than a usual amount of money to hold those investments and more than a usual amount of money to do the servicing, they're the ones who are going to lose big. The consumer is actually going to win big. In one sense, on the loan sense, just the loan sense. And the consumers now are going to win big. If interest rates don't go up, then the consumer now doesn't have anything on the consumer later. But I'm personally voting for, with my feet, with my dollar, with everything I'm trying to do in my soul and being, that we have an absolutely amazing, massive economic recovery, because that will make everyone's lives better, including mine. So anyways, let me know if you have any questions. Please like, share, and subscribe. Smash that like button for me, pretty please. Anyways, again, I'm a loan officer in Oregon and Washington, so please feel free to hit me up. Have an awesome day. Bye.